and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our guests who've come in. TS Harihar of HRBV Client Solution, along with independent investment advisors Vivek, Mavani and Sharmila Joshi, join me on the show today. Today, actually, we've kept it all open, all about stocks. We ask our analysts about one stock in the banking space they would buy, one stock they would buy in the NBFC space. So both banking and NBFC have done extremely well. We asked them for one large cap pick and one mid cap pick. So it's all open show. Today, all stock recommendations in trade today. So let's start with the first one, a banking pick. The Nifty Bank is up almost 4,000 points in the last two trading session. Again, up 1,500 points. So it's moving for 5% like there's no tomorrow. But are stocks overvalued? Is there one stock that, despite the move that we've seen, that should buy? Counters like Kotak are already at lifetime high, but certain counters like Axis and ICICI, they still have ways to go. Hari, I'll start with you. In the banking space, would you recommend anyone buying any stock for an investment purpose now?
See, a lot of the private banks were looking attractive, probably about, I would say, a week, 10 days ago. But I think after the rally we've seen the last 2 days, I think the comfort level is more or less gone. Today in HDFC Bank, if you look at the market cap, it's inching closer to Reliance and TCS.
Yeah,
so I think, the valuation comfort is really going in a lot of these private banks. ICICI and I think Axis, I would still be a little cautious because they have a fairly large exposure to consumer lending, home loans, real estate sector. So I'd be a little cautious in both these names. So the pick I am having today is State Bank of India. I think the stock did correct sharply in the last 2 or 3 months. And I think at the current level, if you look at it, there are a lot of positives. I think NPS finally may be bottoming out. I won't say it is bottoming out, probably it's bottoming out. Loan traction is picking up. And more importantly, if you see the latest announcement made on Friday by the finance minister, I think there's 15% special tax for new manufacturing. That is going to be a big boost for capacity expansion. We will see a lot of companies expanding capacity now in the next probably few months. And all that could actually translate into industrial credit as far as State Bank is concerned. So if you ask me within the banking space, I think State Bank has got valuation comfort. It has got traction in terms of earnings. It also has traction in terms of, I think, NPS, the worst may be over. So SBI would clearly be a big pick for us at this point of time.
How come the PSUs haven't actually participated too much in the rally? We've seen, your HDFC Bank move up 10%. You've seen Kotak, IndusInd. I would leave aside Yes Bank aside. But most of them have rallied. How come the PSUs didn't participate so much?
See, I think on the PSU front, there's a lot of skepticism in the market about the quality of assets, their exposure to areas like probably the real estate, SME. I think SME is a big concern that people have with the PSU banks. So probably, and if you look at the last 1 year, I think frauds are about 75,000 crores. So that's not a small amount. It's about equal to what happened in the last 3 or 4 years. So I think all this is not given comfort to people. They still believe that there's a lot of toxicity still left in the PSU balance sheets. SBI to me looks like one PSU bank which has a relatively cleaner balance sheet. I won't say clean, but at least the size of the balance sheet is so large that some kind of riffraff can probably get hidden in the entire balance sheet. So SBI is one PSU I think probably has a better potential compared to the others. But the rest of them, I think there are still too many issues where they're in a state of flux. Mergers are happening, NP issues are not resolved. So PSU, I would still believe is a question mark other than SBI. Private banks looking good, but as I said, valuation is not giving too much comfort.
Okay, what about you, Sharmila? Were you surprised with the move that we've seen on the banking space and anything that still looks attractive?
Well, not surprised because obviously, as you all were discussing, one of the biggest beneficiaries of this move is this tax cut are banks, and within that space, I think it stands to reason that private banks would see the first move, which is precisely what has happened. So while I share Harihar's caution in the sense that valuation-wise there's no comfort, I'm looking at it exactly. I have the exact same view, but I'm taking the stand that you need to go with quality. Therefore, because like he's picking an SBI saying that valuation-wise there's comfort. I'm picking HDFC Bank. I know valuation-wise there is no comfort, but I'm just going for quality, and I'm going for the fact that they have a better book. Because all said and done, even after this move, precisely as you all were discussing, one of the reasons that PSU banks haven't really participated too much is that there's no taking away from the fact that the NPA picture, etc., still needs to get addressed. That NCLAT has not been able to come to a conclusion on any single outstanding case. So we really need to see closure on all that before we can get terribly positive on that space. So I think, to my mind, the way I'm looking at this whole development is that obviously, it's a big mood kicker. But also you need to now really think that whether you want to. There are two spaces, according to me, that you should be with at this point in time. One is the quality names, and one is where you are expecting that good investment pickup to come up. So in this case, in the case of a bank, I've gone with a quality name and I've gone with HDFC Bank.
Okay, and it's very surprising if you see the market cap move over the past 1 or 2 days. It's come very close to TCS. So Reliance has taken top spot on market cap. TCS has fallen, and HDFC Bank has almost picked up, and a 15% move for a large cap, a 6 lakh crore market or 7 lakh crore 6 lakh crore market cap is no joke for HDFC Bank. So HDFC is the pick that Sharmila is indicating. Probably could even move higher, and that is what she is indicating. Vivek, your sense on the move, and what would you recommend someone to do at this point of time now?
Well, as far as the banking space is concerned, I agree with Hari in terms of SBI. Yeah, and SBI remains my pick. And if you recollect our discussion post the first quarter results of SBI sometime in about middle of August, I continue to be bullish. The price is still the same. It did fall to about 260, 270 few days ago, but it's back there. And just to add to what Hari mentioned and the concern that Sharmila has got, the worst in case of the performance in SBI or even other PSU banks is already there. They've gone through a painful 5-6 year period of taking write-offs quarter after quarter, and now SBI has got a provision coverage ratio of almost 80%, 79 point something as of end of first quarter, which is more than what RBI even mandates. I agree with the fact that, okay, not a single NPA resolution and recoveries have happened, but sometime in future it certainly is going to happen. Whether it's going to happen in next quarter or next 1 year or next 2 years, sometime in future it will happen, and that's going to lead to some significant write-backs. And SBI chairman has mentioned of at least about 15,000 crores of recoveries and write-backs in pipeline, which he is hopeful. We don't know what that hopeful means in terms of timelines. But on all performance parameters, SBI seems to be improving. Credit growth was 12% with the latest tax cuts and starting of a new upcycle in terms of capital expenditure or in terms of economic cycle. Probably over the next 12 to 18 or 24 months, credit growth should probably inch up to mid-teens to maybe 17-18% credit growth. It was already 12% as of last quarter, when probably the worst was in terms of economic performance that we were talking about, slowdown and 5% GDP growth and so on and so forth. NIMs have been on the rise, gross and net NPAs have been falling. Cost to income ratio has been on a fall, and now at about 47%, will probably settle at about 45% in the longer term. And so basically all operating and performance parameters in SBI seem to be getting better, and now you have two kickers, one in terms of significant tax savings that are going to come about, and probably a new upcycle on the economy and investment. On the valuations at about 1.3 times price to book, on a consolidated basis about 1.1 time. I think it's not very expensive, it's pretty cheap. And there is probably one more value unlocking trigger in SBI which will come about in the next 6 to 12 months, which is the IPO of SBI credit card business. Last year they did SBI life insurance and this is going to be a mega issue, some 21,000 crore issue that is being spoken about. So at about 310, what the screen tells me, I think there is significant upside for the next 2-3 years as far as SBI is concerned. Okay, so SBI and HDFC Bank are the two stocks that have been spoken about in the first part of it. The second part is the NBFC space. Now, while banks have rallied, no doubt some of the NBFCs have also managed to recover. But remember, NBFC as a space was worst hit over the past few months, be it on the real estate exposure they had, be it the auto sector exposure they had, be it the consumer slowdown. So except for a Bajaj Finance, which is now trading at close to 4,000, most of them had fallen significantly in trade. Is there any stock in the NBFC pack that our experts like, or is it a sector that needs to be avoided? Sharmila, I'll start with you. Anything in the NBFC space that you think that would make sense?
So I'm going with Bajaj Finance, and to just expand on what I was saying earlier a little bit about going with quality names. I think that this move is going to give you now an opportunity to really scale your business up. And according to me, who's best placed, to really scale up? Somebody who is already doing well, who has a clean book. He can really, that person, that company can really take advantage and really use this saving that you're getting on this tax cut to really take your business to the next level. And Bajaj Finance in any case is a company that I've always liked. I think Bajaj Finance, Bajaj Finance, these are the two stocks in NBFCs which I think we must have spoken about over and over again. So, the management quality is good. They have a better chance of really taking their business forward. So, while yes, I do think that a lot of NBFCs will start doing better because this is going to give them that sort of boost to get out of some of the issues that they've had and build from there. I really think that it will be people who are already in a good, strong position who can actually benefit more, at least in the next year or so. So I'm going with Bajaj Finance.
Bajaj Finance. What's your sense, Vivek? Would you recommend any NBFC positions?
No, I'll stay away from NBFC. So I'll give the reasoning, and instead of NBFC, what is it in financials that would occupy the place? Number one, now I'm talking little conceptual. Any sector which has been a front leader or front runner or a leader in a bull market, and when it goes out of favor, it's quite a substantial period of time that the sector remains out of favor. NBFCs lost favor about 3 or 4 quarters ago. So while the sector remains out of favor, individual companies may continue to deliver on growth year after year. And there is a clear sort of separating the boys and the men. So I would agree with Sharmila, Bajaj Finance will continue to grow, but not necessarily on the stock price. Valuations will grind down, valuation multiples will contract over a period of time as earnings growth and book value continues to increase. And a typical economic or a market cycle is complete only when expansion of multiples and contraction of multiples also happen over a reasonable period of time. NBFCs will continue to be in that phase. Okay, they may have occasional trading rallies, but as a secular theme, it's going to be a while that NBFCs come back as a flavor in the market. And one of the reasons is in terms of their cost of funds certainly is inching up, and that applies even for the best of the NBFC. So if I were to look at a Mahindra Finance also, which has not been impacted at all with all the events or everything that went wrong with the sector, Mahindra Finance has not so terribly been impacted, but their cost of funds also went up, and that is going to put a squeeze on margins. Of course, no respite on bad loans for every NBFC, barring, of course, Bajaj Finance and maybe a couple of others where it's been in a controlled manner. So I'll avoid the NBFC space. I prefer insurance as a space within the financials, especially life insurance as a secular theme, long-term growth opportunity over the next 5, 7 or 3, 5, 7, 10 years, whatever time horizon, driven by penetration increase, driven by financialization of savings, driven by greater awareness on people in terms of covering of their personal risk and protection. And there, of course, the only names that come to mind are HDFC Life and ICICI Prudential Life Insurance.
Okay, that's the view that's coming in on the NBFC space. And Hari, finally, what's your sense on the NBFC space?
No, I agree with Sharmila. Notwithstanding valuations, we still like Bajaj Finance. And I think what's going to happen now is, I think the 4,000 price may look a little steep at this point of time. But I think what's going to happen is that we finally have a situation where growth is going to come back to the NBFCs. You're going to have expansion. You're going to have more of the bank's last mile business getting transferred. You're going to have a lot more of consumer loans coming in. And the good thing about Bajaj is they have a fairly large exposure to real estate. But unlike the other NBFCs, they are not giving too many home loans. They're not given too many loans to real estate companies. It's a lot more of loan against property, where the risk is much lower if you compare it with probably a pure home loan or a real estate funding. So to that extent, I think although Bajaj Finance has a substantial real estate exposure, it's more of a mortgage lending where the risk is much lower. Also, I feel that what is also going to happen now is that the entire NBFC space is going to become what I call a winner-take-it-all kind of an approach. And the gap between Bajaj and the other NBFCs is going to become much wider. So I think the biggest beneficiary of this whole game is going to be Bajaj Finance, and we like this stock. Notwithstanding rich valuations, Bajaj Finance remains a top pick.
Okay, that was Bajaj Finance. So both of our experts recommending Bajaj Finance. Vivek would say he would prefer the life insurance space and not take position on the NBFC side of the market. The third one we want to talk about is one large cap stock that should be accumulated at this point of time, with notwithstanding the move 10, 15, 20%, which is already coming. Still, there's a lot what someone can buy at least for the next 1 year. Vivek, in the large cap space, what have you recommended your clients after the move?
Well, as far as the last, I'm going to be talking about not just one but 4 related stocks, basically the auto sector. So if you recollect our discussion we had exactly 3 weeks ago on this program, and I had mentioned that auto sector, notwithstanding all the negative news and negative volume numbers coming in month after month, quarter after quarter of bad performance of falling profits, I think auto sector has bottomed out. Even at that point of time I mentioned, I continue to maintain that auto sector continues to be, according to me, a very good opportunity. This slowdown and negative volume growth, or negative volumes, is a phenomenon that occurs every 5 or 6 years. It's a cyclical thing. So I mean, it happened to be in 2019, and it's a matter of time we get back into positive volumes for most of the companies. Finally, it's driven by domestic consumption and purchasing power. So there, my preferred picks continue to be in the two-wheeler space, Bajaj Auto and Hero MotoCorp both, and on the four-wheelers, it's Maruti and Mahindra and Mahindra. Mahindra and Mahindra, of course, is a conglomerate with a lot of subsidiaries and related, group businesses, holdings. So a proxy play to the tractor business of Mahindra could be Swaraj Engines as an extension, but it's actually a small to mid-cap company. In case of Maruti, Bajaj Auto and Hero, all three have terrific and a very strong balance sheets, which are debt-free, huge amounts of surplus cash on the balance sheet, very high return on capital, return on equity from their core auto business, and of course valuations are quite reasonable, with all of them in less than 10 times EV by EBITDA, or just about mid-teens in terms of price to earnings. I would continue to bet on these companies.
Okay, Sharmila, what's your sense on the large cap pick? What have you told your clients?
So, just as I was mentioning earlier, that one part of the theme is that you play quality. I think another part is that you play the fact that what I feel this move is going to do is, for the longest time we've been saying that the capex cycle has been, it's not been there. But this move looks like it will sort of revive investment, because people are going to come forward and either re-look at the investment projects that they had or set up new investments. And I think obviously the one sector that will benefit from that is the capital goods sector. So I'm within the large cap, I've gone with Larsen within that space. I think what this move has done straight away is that they're going to, what I believe from what I've read, is that they're going to go back to ROE levels, which they had hoped that they will do like in a year's time. They're going to do it almost immediately because of the kind of saving that they're going to make. But I think that's one part of the story, that their earnings are going to look better. The bigger play, I think, is going to be when you actually see this revival in investment, and that will, I think, mean much better things for a whole lot of companies within that space. So you need to see that sort of coming, because this is the expectation that this move will unlock. But I definitely think that Larsen, being the large cap that it is and really the leader in that space, will definitely benefit. So I'm going with Larsen.
Okay, and Hari, what's your sense among the large cap? What have you recommended?
No, we are on Larsen too, because and I think largely for the same justification. We also expect two things. One is the tax cut to 22% and the 15% incentive tax given for these companies who are looking at new manufacturing facilities between 19 and 23. I think that's going to be a big game changer as far as Larsen & Toubro is concerned. If you look at Larsen & Toubro, starting from 2012, the stock has been on a long-term downtrend, largely because the capital cycle had turned negative. I think this is probably the first, I would say, fiscal incentive for capital cycle to turn positive. So I think that is one thing that's going to benefit L&T both sentimentally and also in terms of orders. Number two, I think we also need to understand that Larsen has got two advantages. Number one, it's got about a 25% exposure to the hydrocarbon sector. And I think with the oil prices remaining steady above $60-70 a barrel, I would believe there are a lot more of hydrocarbon investments are going to happen over the next few years. So I think that is again one area where L&T is going to benefit. Secondly, I think about 35% of Larsen's revenues come from the international market, and that's again an area where we're seeing a lot of investment cycle reviving. So that's again going to be a positive for Larsen & Toubro. But I think more importantly, what has happened domestically is that the capital cycle, which is almost stagnant for the last, I would say, 4.5 to 6 years, I think that is finally going to revive. So that is probably going to be the big positive as far as Larsen Larsen & Toubro is concerned.
Okay, so that's the view that's coming in. L&T and the auto space is being discussed as far as the large cap space is concerned. And finally, we discuss a mid cap idea, which our guests can discuss that can be bought at this point of time. So, Hari, I'll start with you again. Any mid cap that you've told your clients to start accumulating in this fall?
No, we stay positive on Aarti Industries, and we've been positive for a very long time. I think a couple of reasons. The specialty chemicals business has been doing well with the construction of capacity in China. I think this is one business that has seen a very sharp improvement, I would say, in terms of the international offtake, especially I would say the South American business has picked up very well. The stock has been rallying in the last few days, but I think the stock has been largely quiet. If you look at the last 6 months of data, the stock has been largely quiet. So I wouldn't read too much in the current rally. It is still below what it was about 6 or 7 months ago. But I think the most important part is that we are seeing a global upcycle as far as demand for specialty chemicals is concerned. There is a company that has managed to maintain very strong margins. It has managed to maintain very strong growth in its earnings quarter after quarter. So at a very stock specific, I would say, bottom-up level, we would prefer Aarti Industries in the mid-cap area.
Okay, Aarti Industries. What about you, Sharmila? Anything on the mid-cap end?
So I've gone with Tata Global, and this is a stock that I've really recommended in the past, and before this whole things went awry, and as we began to see this sort of grinding down. So, the reason sort of ties up with what I said about Larsen. You're expecting to see a revival in sort of demand. So, on the basis that you could see a revival in consumption demand, and the fact that they've now got this business from Tata Chemicals, so they become like a full-fledged FMCG play going ahead, and hopefully they start getting those valuations. So this is the stock that I've gone with.
Okay, but what's the rationale? Is there any fundamental rationale you think earnings will improve? What's your overall view on this?
Yes,
thing?
Because of the kind of products that they've gotten from Tata Chemicals, they will grow that business, because that is a business that they can really sort of scale up. And again, I think within that basket of products that they have, there is enough where you are not only sort of focusing on a rural demand, or you're expect something from an urban demand, because these are like when you're talking of pulses and salt, and salt is still with the array of products that you have. That will mean that they will be able to sort of really get to a better level if things pick up. So that possibility is now there for them to do much better than what they have been doing, because this acquisition has come at a time, this deal, whatever, has come at a time when you've been actually witnessing slowdown. So they will be able to capitalize and really push their products out more and do a better branding, etc. And market will slowly start recognizing it as, as an FMCG player, and start giving it that valuation as opposed to, just sort of a trading company that they were earlier. So I think the possibilities really open up for a company like Tata Global going ahead. So maybe there isn't enough happening now to suggest that this could be a buy at this level. But I think, just as in the case of Larsen, they will definitely see the benefit of things getting back on track in the economy better than some of the other places.
Okay, before I move to Vivek, just one word on Aarti Industries. Before the crash did happen, Aarti always was trading at those levels. It didn't correct as much as this thing. Is valuation something that that you would look at, or are you happy with the valuation?
No, valuation, if you look at it in terms of current earnings, it's probably at the upper end of what most of the specialty chemicals are trading at. But I wouldn't read too much into that, because I look at specialty chemicals more as what I call an anti-China game. It's an area where China has been very sharply constricting its supply. So I think the whole market opens out for India. And let's not forget the Chinese capacities are huge. Almost 40% of the world capacity of specialty chemicals in China. So that's a huge market that opens up. I think now is the time for all these people. They're going to get into fresh investments with this new tax regime coming up. I think we'll have expansion. So I think if you're looking at valuations, yes, I think currently the valuations are a little on the upper side of the range. But considering the future growth, I wouldn't really worry too much about it.
Okay, and Vivek, which is a mid cap that you've told your clients to buy?
Okay, so nothing new actually. Nothing has actually changed between Thursday and today. Of course, we have had very sharp rally. My opinion is that it's largely by short covering and not necessarily a start of a new cycle. We could have a retracement of this almost 3,000 points on the Sensex and almost 700-800 points on the Nifty. Generally, as a matter of practice, I buy only on retracement or corrections and not necessarily in these kind of markets. Coming to specific stocks, a lot of stocks come to mind, but one thing is certain, that even if there's a new market and economic cycle starting out, the key thing is to stick to quality companies that generate high return on capital, return on equity, companies which are light on debt or deleveraging, or preferably zero debt, generate free cash flows, and importantly reward the investors also in terms of returning that surplus cash. So among the mid caps, the names that come to mind, we have of course discussed some of them before: Mahanagar Gas, Voltam Transformers, KEI Industries, Bharat Electronics, another company called RITES, RITES, which is a railway infrastructure company. So these are the companies that we already have investments, continue to be bullish and continue to hold them. One cyclical play related to auto, since we discussed auto, cyclical play related to auto, pretty positive on JK Tires, very cheap on valuations, and with a turn in the cycle, expansion of margins, all of their capital expenditure already behind them, so they have peak debt. So now what we are going to see is expansion of margins driven by operating leverage, savings of interest because of deleveraging, leading to more than doubling, almost tripling of earnings in the next 3 to 4 years. The promoters have infused 200 crores just few months ago at a price of 102, and the stock is available 30% discount to what the promoters have infused. Valuations are very, very cheap compared to most other auto ancillaries and other tire companies. So that this is a cyclical play, otherwise most of the others are secular long-term growth stories that I'm focusing on.
Okay, so that's the view that's coming in on the mid cap. So JK Tires, Aarti Industries are some of the stocks that are being spoken about today. But with that, it's a wrap on today's edition of Hot Money. Let me thank all of my guests who've come in today and spoken about a wide variety of stocks which would help you make certain investment decisions. But Vivek, thank you so much. Sharmila, thanks so much. Hari, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg.